Hello, everybody, and welcome back to a Mario Nallfall broadcast where we talk about AI, crypto, and other evolving technology. And today we've got a full house today, and we're going to be talking to you about prediction markets and things that are happening to make it a competitive trading ecosystem. And we're going to go around the room, but I'm going to start with Buzz first and see what's on your mind, Buzz. There's a couple of stories I imagine you might want to take a shot at. What's first on your radar today?
The most exciting news on my radar, like we were talking about that exciting technology in the space, is definitely yet another centralized company, Robinhood, launching an L2. And I know that on this show, we're going to be talking a lot about prediction markets as well. So I'm sure people here have seen that World account that really abandoned ship from Solana right over to Robinhood. I'm curious to know whether or not people think that's a marketing stunt and they were going to be doing that all along, because it seems like a very coordinated and strategic launch on the part of Robinhood. But I'm ready to get into all of that. I think we got the perfect panel here to do it, Pulse.
Yeah, me too. I'll take a shot last because I don't want to make the soup myself. But let's start with Julie and see where your mind is at today. Robinhood, among other things. But what are you watching today?
I'm just watching the markets right now. I feel like the sentiment is kind of improving across the broader crypto ecosystem, but cautiously optimistic because I think most people feel like we're still in for some pain before we continue to trend upwards. But yeah, just watching everything that's going on and happy to be here talking about prediction markets today.
I will admit it's been harder to figure out sentiment lately. You can never expect a Michael Saylor sell to make everybody feel good the next day, but this one didn't feel like it hurt the same. I can appreciate your viewpoint. Thank you for being here, Julie. It's good to have you back. Vincent is here. That's AGI down there in the corner, man. It's good to have you. What's up? How are you?
Well, good to be here. And so I'm watching GPT 5.6 that is coming soon, and I can't wait to have it. So I guess it's coming out tomorrow. And for the prediction market, I think AI will do marvelous. I think it would be phenomenal because AI is able to know everything. It's trained on every data that exists. And if you use Monte Carlo research and a few approaches, sentiment analysis, and so on, I think AI will be extremely good at making prediction. And so I'm very excited about that.
Yeah, I think a lot of people think that they're playing against the AI already. So we'll see what the sentiments continue to be, especially as Robinhood brings World over there and has their own prediction market opening up. I'm sure Patrick has some predictions about how that's going to go for them. How are you doing today, man? It's good to have you back.
Yeah, I'm good. Thank you. Nice to be here again. Yeah. I'm actually looking a little bit at Europe right now with the statement regarding prediction markets that they are binary options and potentially banned. This came out. Then today they announced they are looking to expand MiCA into more areas, including tokenized stocks. And then this funny thing, I'm not sure if you've seen it, Zach XBT tweeted this earlier. There was basically, there's an exchange that apparently cannot pay out anymore. And they start to blame MiCA. So basically bankrupt crypto exchanges are now saying, oh, it's because of MiCA, we cannot pay out. It's funny. So, but yeah, it's just funny to watch.
Yeah, any excuse they can come up with right now, right? They can point the finger anywhere else. Well, I guess we'll have to wait and see how that washes out. I'll have to follow up on the post myself. Thank you for bringing it up. Good to have you here. Garfield back on the show again, man. What's on your mind today? How you doing?
Hey, guys. Appreciate being here. There's a lot of stuff going on. It's exciting. I do agree with Julie, what she said, that I think there's a lot more upside in the future than there's downside, but I do think maybe we will have a little bit more downside. But considering it is the U.S. Political midterms year, that's always been the bottom of the bear market. So I think we still are in that 4-year cycle. I'm excited about it. I think it's a builder's market. Patrick was just talking before the show about how they've gained a bunch of users, which is awesome. That's exciting, considering we're not even in bullish times yet. I am paying attention. At 2:00, there's going to be the FOMC minutes that'll come out. It'll be interesting to see if they're dovish or hawkish. There's a lot of stuff going on in the industry, like you said, with Robinhood launching their own L2. I'm sure people still have the PTSD of them shutting down their exchange. Hopefully they don't shut down the blockchain when they choose to. But other than that, yeah, like you said, the world buzz, which is the that decentralized on-chain prediction market, that's been all the buzz the past 3 weeks, and it's crazy to see them. They just tweeted that they're transitioning from Solana to the Robinhood chain, so that is very interesting. But yeah, exciting times.
Yeah, certainly a couple of different stories to pick from right there, and I think everybody will want to take a bite out of them. AM is back on the show. Good to have you, AM Crypto, back. What are you watching today? Because there's a couple of things he mentioned there that I think you might be watching.
Yeah, so definitely that update, the reason why that exchange is not paying out, I'm looking into this because I was following that story already a little bit. And when it comes to prediction markets, yeah, also, like everyone else, I saw that Just World changed the Robinhood chain. I want to have a deeper look at the Robinhood chain, what it actually is under the hood. I had no time yet to do that, to see if they just vamp another chain, basically. And then when it comes to prediction markets, there is now a lawsuit against Polymarket with the bet that resolved to know when MicroStrategy is going to sell before the 31st of May, and it resolved into know why they actually sold. So there are now these two parties that lost like $500,000. They actually went and are suing now Polymarket, which is also a really interesting story.
I think that'll be a great conversation about oracles and resolutions in prediction markets, because that's something that you don't really dive into until it doesn't go your way. So we'll learn a lot from that. That's a good point that you bring it up. Chris Terry's got his eyes on everything today. Good to have you back, sir. What are you looking at?
All eyes on the Clarity Act in the Senate next week. That's the single most important thing in crypto. Are we going to get any regulatory clarity? And I'm going to throw myself onto the fire and say, no, the Democrats are going to burn it at the stake, and it's not going to pass the Senate, and it's not going to go to a vote this year. I don't think they're going to get it through. Polymarket earlier today, I think, was down to 45% on the Clarity Act. And, when you start looking at what's happening with the, Polymarket, Kalshi, now Robinhood, not to mention a half a dozen other exchanges I've got stuff on, I think that we're going to see a wash of prediction markets and this chain on Robinhood. I don't think, honestly, anybody gives a shit. People that are using it on Robinhood don't care what kind of chain the prediction market's on. And I think all this stuff, for in the crypto business, we think it's, oh my God, another chain, what's happening? But I think the end user with the phone doesn't care about what blockchain his prediction market's on. So, God bless him. I hope it works. It's just another guy or another outfit playing in the prediction markets. And no matter what broker you're at, you'll be able to place a bet on football or soccer in this case, and place your bet. And I think it's irrelevant what kind of technology is underneath it. It's good for us, but I don't think it's meaningful in the big picture. What's meaningful is the Clarity Act, and I think that's important, but I'm not hopeful.
I think Robinhood's betting on better late than never, because they're certainly not the first one to the prediction market game, but they're still going to have a huge user base to get into. And I'm with you on the side of Clarity not coming through. It's just been too long, man. It's been dragged to death, but we'll have to wait and see another week, it sounds like. Shyla, to round out the room, there's a lot of topics that got tossed around. What's front and center for you today?
So looking at Bitcoin, I think it's going to continue to keep reacting to this will they, won't they tumultuous relationship between America and Iran. And I think that's just going to keep on reacting to that news, geopolitical news. It was interesting to see earlier this week when, is it YGG, the Yield Gaming Guild Gaming, they announced that they're closing down. I think that was a massive deal for gaming, because I think it's a sort of nail in the coffin for blockchain gaming. To outly announce that they're shutting down. And the other thing that was really interesting today is interesting to me, being at Yellow, because it looks like BNB chain are looking to launch something very similar to what we're launching. So they are building a purpose-built agentic trading platform. So I think this won't be the last. Obviously, I think there's going to be a bunch of these that come up over the next few months, and it'll be interesting to see how they gain adoption, or which rails are going to be providing the best I want to say experience for these for agentic AI trading.
Yeah, I'm not surprised to hear that BNB would want to get in on agentic payments. The story that came across I had shared with Buzz about Cloudflare relying on X402 is an indicator that I think there's going to be a lot of agentic and online payments that happen that way. I want to circle back around Batcher Patrick, because you brought up some stuff in Europe that I don't have as much of an eye on, and I want to ask you what you meant when you said Europe was thinking about expanding Mika, because that sounds so like what I would expect already. But what are you worried about? What specifically were you talking about?
No, actually, it was announced today that they are looking or asking basically for industry feedback to expand the MiCA regulation to tokenized stocks potentially. So it's just gathering feedback right now. But I mean, the EU does what it always does, regulating instead of innovating. So that is a little bit the problem. But again, right now, it's at least only at the stage of gathering industry feedback. So, but they are just looking to make sure that everything that is blockchain related will be covered under MiCA. Right now, it's simply not. So tokenized stocks are not covered by MiCA at all. They fall under MiFID, which is the securities law. So it's a little bit like MiCA. You can think of CFTC in the US and MiFID like SEC. So just that it's a law and not a regulator. But that is what they are basically looking into if they should change it. So, but yeah, let's see. And also they want to expand the stablecoin regulation to foreign issuers.
And what does it normally mean if the first phase is gathering industry feedback? Where's it typically gone from there? Whether they take that feedback and throw it in the trash can and do everything anyway, or what?
No, not necessarily. They are listening to it sometimes. So the biggest problem is, I mean, MiCA is a regulation, so it's really done on the EU level, which means you have basically 30 different countries and a lot of bureaucrats bringing in sometimes pretty weird ideas. So it's not like the industry feedback will really shape it, but it's at least considered. So, but they do a little bit cherry picking. So to basically do whatever they want, they use then some industry feedback to basically justify why they did it. That's a little bit the case. But ultimately, I think we have no idea in which direction they are going, because they have a legal problem here. Since MiFID is already existing, they have to make sure they are not kind of disrupting those securities regulations. So it's a little bit difficult, because clearly a tokenized stock is a security, right? There's no point in arguing. It can only be a security. So it will be interesting how it turns out. But yeah, let's see.
More bureaucratic stuff. And it makes me think, Chris, about what's going on here with Clarity. Why are you still so focused on that at a time where like almost everybody I talk to has got, Robinhood or all these other distractions? Why are you still focused on Clarity?
Well, I mean, if it wasn't political, if you just looked at the act from an infrastructure standpoint, it would be, it's huge for the industry, right? It's legalizing this business we're in, right? Technically, there's no law. Right now, everybody still is operating in this gray zone, and to be able to have law would change everything. It means there would be the banks in the United States would be able to handle differently. The way assets are handled, the tokenization of stocks and everything else. I mean, it is a big deal, and it's important. But because of Trump, God love him or hate him, and because of the left's hatred of him, and because of the ethics rule, and of course his $1.3 billion, his Trump coin, of course, none of us, I can't imagine anybody here in crypto likes anything that Trump did with that bullshit meme coin. And because of that, he's kind of, I want to say, a drag on the industry. One hand, you love him. He talked about crypto. He went to last year or the year before, he was, Nashville and talking about it, and he put it on the center stage, and it's wonderful. But the flip side, because of the, Trump in the Liberty Financial and his company and the money he's making, it's a lightning rod. And now at this point, it's become political football rather than doing what's right for the country, right for the nation, right for our regulations. It's going to get smashed because Trump is making money at it, and they don't want him to do it. And it's very unfortunate, because it would be a huge win. Now, I happen to be in Europe right now for the summer, and I'm very well MiCA, as Patrick and I have talked a little bit about it, and they're crushing crypto. Tether pulled out of Europe. Tether's no longer in Europe. They pulled out of all the exchanges over here. They were trying to be the last bastion. They were in Greece. They pulled out of Greece. And so, you have this lockdown, and it could be a beacon for crypto in the United States for builders. That's why Patrick, let him talk about it. He's in the United States. He's not over in Germany. And it's because of that. And what we'd like to see is infrastructure to make all these businesses absolutely legal. It's important. But the politics, I think, are gonna bring it down. And it's because Trump's a lightning rod, like him or not. I think it's really a double-edged sword. I hate to be so vocal about it. I try not to talk politics on this show, but in this case, it's front and center to what could be really good for the country and good for our business.
I agree with you. I don't want to make it as political. Like, it's not about that. I just think it looks such a bad look for people outside the industry to see this guy make that kind of money, and they already felt that kind of way. Julie, would you buy that for $1 that the word "a drag on the industry" could be applied there and say that he's actually kind of dragging things down? Is Clarity being slowed down something you could point at Trump and be like, hey, man, this might have something to do with you?
I definitely think that he is a reason that the Clarity Act isn't progressing further. But at the same time, when I go in public and I'm talking about crypto, the first thing a lot of people say to me at this point in time is, oh, the Trump coin. So it was sort of a normie onboarding tool where all of the normal people I would encounter in day-to-day life, they all still mention it like it's still a thing, like it's not down 98%. But, you know, I do think overall that as Chris was saying, that we've found that the Clarity Act has hit some snags, and there are people on the left that are just, they're not going to vote in favor of it. And so I do think that as we get towards midterms and everything else, we're going to have issues with Clarity Act, and that's going to have ripple effects across the whole industry. So as much as I like Trump and the fact that the normies still mention his token, I think that overall his presence hasn't been good for our industry.
Julie, when these normies are mentioning the Trump token, are they doing so in jest, or are they actually positive about it?
I don't know that they're bullish overall. Like when people were excited about Dogecoin, I think people were really bullish on it overall, and it had this sense of community, and there was this sustained hype around the token. Trump, as I said, it's down 98%. So anyone who bought into it, you know, they're definitely upside down. And that just leaves a bad taste in people's mouth, especially when they get into crypto, they think of it as an investment platform or an alternative to trading stocks. And then you encounter this, you know, how many tokens have this same result? And it just gets ugly.
People are only going to be putting up with that for so long. And even though, like you said, that's a great question, were they bringing it up in jest? I think probably most of the time the answer to that is going to be yes. They're absolutely bringing it up that way. What do you think, AM Crypto? Do you think Trump has had a negative impact on the industry? And what's it going to take to shake something like that? Like how long away from that do we need to be before people start bringing it up again?
Well, I don't know if I was on if you were on that space before the elections with Trump, where I said to Scott a while back, when if Trump ever comes out pro crypto, he is going to win the election. I was laughed out on that space, but then actually I was right about this. And now I think what Trump did definitely hurt the industry. The amount that he extracted through the meme coins, willingly or unwillingly by his advisors, because he of course did not do this personally, but like through third parties that are advising his families, definitely has hurt a lot the industry, and I think also contributed to the fact that Bitcoin is kind of stalling in the areas where it's currently stalling, regardless of in what part of the cycle we are currently in. I think Bitcoin would be way at a different price level and higher at a different price level if he would have not extracted so much money out of the space.
You know, I was asked such an interesting, thought-provoking question last week, and it was, because I think everyone on this call and most people in crypto would agree that the Melania coin was like the beginning of the end for last cycle. And I got asked the question, how much money would you have had to have made on Melania to still hope or still wish that the Melania coin launch happened? Because I think a lot of people would like they probably own Solana, their Solana bags are down, their Bitcoin bags are down, their ETH bags are down, they're getting wrecked left, right, and center in crypto after that launch, and seemingly all pointing towards that being the beginning of the end. Somebody just asked me, like, how much money would you have had to have made to still wish that it happened, which I thought was thought-provoking.
That's a crazy question. And we're talking like generational money, because obviously you're out of the game after that. Like that's your final haul. You wash your hands of crypto because you know it's nuked for the next 4 years. That's burning the entire thing down. I don't think there has been anything that I could have made short of generational wealth that would have changed it. But I do think that what AM said is that he does feel, you sort of said, if I'm paraphrasing, that Bitcoin would be better off now, even though it might not be at all-time high, it'd be at a higher low if it weren't for some of that. And I do think that's the sentiment. That's why I think bringing up that sentiment is so interesting. Shyla, from where you're at, do you think that that's true? Do you think sentiment itself right now is reflective of, because there's so many things going on macro. There's U.S. midterms, which was brought up here a couple of times now. There's all the stuff going on in Europe, which Patrick has brought up. Why is sentiment where it is? And do you think it's right at like the 19 to 20 for fear and greed right now?
I think everybody's just watching the price of Bitcoin. And like I mentioned in the previous one, I do think it's a correction with all the institutional money moving out, and similarly to how Garfield feels, I think it's a very positive. Once we've corrected, and I think we're going to go down a little bit more after that. I think we've just, it's all good news for us, hopefully. With the Clarity Act and everything else, there's so much positives around crypto long term, I think, and with all of the interest that we're getting from institutional markets, I think that will remain and that will grow. And yes, I'm feeling quite positive overall about the macro market.
I think if Trump hadn't done what he had done and driven things down the way that they were, I don't think prediction markets would have had quite the same attention in the rise that they have, though, because the sentiment on crypto being down allowed for people who were looking for risk, because what we're really talking about is people who just want risk exposure to flow into something else. What do you think about that, Patrick? Do you think that despite the negative sentiment in crypto, that it drove prediction markets to a higher place?
I mean, it certainly did. I mean, the entire meme coin space died up, right? So people were just looking, where can I gamble now? And this time it was basically prediction markets. I mean, a couple of years ago, it was ICOs, then meme coins and NFTs in between. So, I mean, it's just basically moving from one area to the other. But maybe one other thing, I do not really agree that it's basically Trump's fault that Bitcoin is where it is. I mean, there are many aspects, right? Including our geopolitical situation is, let's say, confusing, to say at least. I mean, I cannot count anymore how many times we had peace and war with Iran. It's at some time just confusing. And also, I mean, a strategy, for example, I mean, promising people you get forever, basically a dividend from us, but not really having a plan how to pay it, right? And then saying one thing, doing the other. This doesn't help the Bitcoin price either. And actually, for this conflict of interest, I'm not sure if you've seen it, but today there was a Wall Street Journal article. So we entered into a term sheet for now to acquire from Alt5, which is one of the crypto companies more or less tied to Trump, Nasdaq listed, now AIFC, to acquire the entire crypto business. They are moving out of those crypto businesses and focusing on AI. So this might help with the Clarity Act as well, if basically those Trump companies are not that closely tied anymore to crypto, right? If they are focusing on other areas. So I'm not really convinced that this is just the only reason. And honestly, I mean, people should know what a meme coin is. This is just gambling, right? I mean, it's a meme coin. I mean, what do you expect, to be honest? This is a risk exposure, as you just said, and that's it.
And people are going to find it where they can, whether it's sports books or prediction markets or meme markets. You'd mentioned, Vincent, in the beginning that you were looking forward to the new edition of ChatGPT that was coming out. What in particular has got your attention about that? How are you looking forward to and applying it this week? What can we learn from your plans?
Well, I'm excited about that because of larger capabilities. But if I speak about the blockchain before that, I think the blockchain is very useful as a store of trust. I mean, you have LLMs right now, and they hallucinate a little bit sometimes, which make them that the industry cannot use them because of that hallucination and something. But if you can have LLM that don't hallucinate anymore because you can verify, you can do some holdback and so on, and you can validate capabilities and so on, and you can store those capabilities and those skills that are verified on the blockchain publicly, and then you get LLM like ChatGPT, but in a way that is trustable, verifiable, and so on. You can do that with the blockchain. So that's extremely useful. It's like you will have ChatGPT with increasing capabilities, skills, and so on. And the skills that are proved, you put them on the blockchain, and you continue to add them at the age and act in the world. Then you have a very positive use of the blockchain. Also, the blockchain is very useful for AI agent, of course, because of the crypto and so on, the token. But for ChatGPT 4.6, well, which is coming out most likely, it's rolling out right now, but officially tomorrow. So, of course, well, we already have, of course, ChatGPT to code, to build, and it's already phenomenal. I'm doing half a year of work every hour that I'm working with it. So it's kind of extreme right now. But that's ChatGPT 5.5. So I do things that are phenomenal, but I'm not very much limited. I mean, they are at human level at this point, those agents. But if you have beyond that, then what can you do with that? What you have something that will be potentially beyond human level, and then what you need to have a structure to deal with it. You need to have for example, you have agents, you have skills. You need to be able to orchestrate those skills. You will need to be able to evolve those kind of orchestration, those skills in a recursive self-improvement loop, and so on. And so at that point is like for most people, they won't see a difference because they ask to write a blog or things like that. And ChatGPT right now is able to do that perfectly. But for people that want to create things, that want to innovate, that want to create the future, having tools that are beyond human level, if you can harness that. I mean, what I mean by that is that usually people, they see that you use AI and it does that for you. So you don't have to put any effort, or most likely. But if you put the same effort as you put usually when it was difficult to do it by yourself, but you use superhuman tools with orchestration skills, you evolve the goal and so on. If you do that strategically, then you become able to do much, much more. Then this is where the future is created. So it's like the AI era has been started kind of last week, or in the last few weeks with Fable. Now we are moving to the AI era. I mean, the world has changed. So we are transitioning from an era where AI was less capable to AI, which is becoming more capable than ourselves, which is extremely exciting.
You sort of described me there already, in that I already know I'm not getting the most out of the model I'm already using. So that's why I'm asking what's coming out with a new one, so I can underutilize the next edition, because I don't feel like I'm getting the most out of it either. It's funny that you put it that way. I'd like to ask the whole panel about this. I've done this in other shows, but I'd be curious because Patrick's going to love this topic. I know this already. For most U.S. users, you're not supposed to have access to Polymarket. You don't have to admit to it here, but Polymarket clears like $500 million despite being banned. So you guys don't have to admit it here. But what do you guys think about access for U.S. users to things like Polymarket and the fact that they just make all this money? And do you think, Chris, I want to come to you first because you're the one that was championing Clarity. Is Clarity is something that can get in the way of that, or are people always going to find a way to get in and have access? Or should there be stronger restrictions for U.S. customers having access to, quote, banned products like Polymarket?
Well, the libertarian in me says that let me waste my money, right? It's my money to waste. Whether or not the Clarity, I honestly can't say I'm versed enough to find out whether or not that these binary bets in Polymarket are part of the Clarity Act. I would assume they would provide some, no pun intended, clarity to the prediction markets, but I actually haven't looked and I haven't taken the time to do homework on how they're affected from the act. Of course, everybody and the brother uses a VPN for Polymarket. I mean, everybody knows it, right? And so that's not some kind of big secret. But again, I think if we have often talked on these shows, what's happening, like my daughter's 25 years old. She's on her phone all day long. She doesn't own a computer. She doesn't care how she gets the prediction market. I don't think she plays too much with that stuff. But for her, it's irrelevant. If she can get it on Robinhood, she'll just place the bet on Robinhood, right? And so I think in some of the other brokers, like I happen to be with a broker called Webull for option trading. Webull has prediction markets. I think even Schwab is going to get into the business. It's going to be completely obtuse where you get it, right? It isn't going to make a difference. And I think it's going to be interesting how Polymarket does that. What happens when it becomes that everybody in every financial institution, including Bank of America and Chase Bank, you could do it with your Visa card or something. That's where it's going to end up going. And I think that we need regulatory clarity for that to happen. And I'm assuming that the Clarity Act will do it. So the libertarian in me says, it's my money to lose, get out of my life. On the flip side, I think that having a regulatory framework will just make it, completely irrelevant where you get to place the bet, right?
It's available in almost all my apps for sure. Garfield, Can I ask you? I want to take the stance, and you can fight against me. I think that it should have stronger regulation because I think Americans are being taken by advantage of, and people are losing a lot of money on these things. Do you agree that they should be restricted, or am I wrong?
Well, I think it would help if maybe they had a cool off period or something. Let's say you dried out your bank account. Maybe you have a cool off period or something like that. Because I have seen friends, completely get liquidated. So, it's kind of the Wild West still. You can use Polymarket with a VPN. I don't know if that's illegal or not in the U.S. Doing something like that, you're breaking their terms of use on Polymarket. But I think as we get further in, there's so many stories of people losing a lot of money that there should be some sort of maybe guidelines, maybe even training courses. I really don't know. I haven't gambled a ton on there. I've done more of my gambling on meme coins. I think the upside, the risk to reward is better. Buying something that's decentralized, burnt liquidity, whatnot. But yeah, I do think that there should be maybe some additional things in place. It prevents people from taking a lien out on their house and betting it.
Well, right now, the only option is 1-800-BETS-OFF. There can talk you through it. And if you've got a problem, that's where you go. But it's difficult to think about it. Julie, what if I took the same stance with you and I said that I think that U.S. customers should have stronger restrictions against getting pulled into things like Polymarket? Do you think I'm right or wrong?
I think you're right. I think the biggest question to ask is, whenever you're losing, who are you losing to? Because you're not losing to Polymarket. You're not betting against Polymarket. You're actually betting against other people who have funded a contract, put that contract there. So then you have to ask yourself, was this contract something that somebody can control the outcome of? Is it something where they have insider information on it? Now, Dune is a data partner to Kalshi, and it was an open source where people could go and kind of read the analytics of what was actually going on. But they ended up making that closed source because what came out was actually not something that was favorable to Kalshi. That's now something that's behind a $40,000 paywall. So if you actually want information on Kalshi and where those bets are coming from and who's winning, well, it's going to cost you $40,000. So people like me, the retail trader, the meme coin trader that wanted to pivot from meme coins to prediction markets, well, you have to realize that the people who are actually creating these contracts are putting a lot of money behind it, and it's usually Wall Street. So I don't want to go against Wall Street if they have insider information or can control something. Now, one of the bets was when would Brian Armstrong use words like Solana or Bitcoin? Now, that's something Brian Armstrong gets total control over. So now think of like when somebody launches a creator token and they send that creator total control. That's exactly what's just happened. Now Brian Armstrong is in the driver's seat to be able to say, okay, I'm going to drop this word on this date and whoever wants to benefit from it gets to. So there's just a lot of really gray areas, and I could go in further. I don't really like prediction markets. I think it's hyper gambling to the worst degree. So I would have to be more on your side.
Yeah, it sounds like you could do an hour-long show on it because I know you got more and you're holding back. Somebody's got to get Julie on and let her go off about that. Let me ask you, Patrick, what do you think about that stance? Do you think that I almost view it like sports betting? Do you think I'm taking my view too far and it should be more available?
So actually, I think regulations are simply not the solution. That's a problem. So every kind of government intervention usually creates more problems than it solves. Just a very good example is what they did in Europe. In Europe, they did those CFD product interventions. So like they limited crypto CFDs to 1 to 2 leverage. You can only do X and all those things. And so what was the outcome? So the clients lost 74% of the time, according to the public information before, and like 72 after. So nothing, but they disrupted the entire industry. And where do people go that want to trade now more than 2x? They go to, I don't know, hyper liquid, whatever, right? They can trade with 100x. So actually you are driving people away from companies to the offshore businesses. So I think if you impose more regulations, more people will use the VPN and will just gamble on offshore jurisdictions, because basically they phrase it like the government just wants to prevent you from making money. And people believe that. I mean, they don't see that it is meant for their protection. They just see, okay, this is the big guys that just want to keep us out of this market. And the same story with like leverage trades. It was with CFDs, whatever it is. So I think more regulations are not the solution, actually.
Patrick, we've seen that within the U.S. as well. Like one of the gambling restrictions in the U.S. is one that they're supposed to KYC all of their customers. So like the unique identifier of all their customers obviously becomes their driver's license or passport when you sign up. But if you want to bet a certain amount of money, like you're also supposed to submit your, I don't know what it's called in the US, but your T4 is what it's called in Canada, like how much money you make, like how much money should you be able to bet on the platform. So like if you sign up for, say, BetMGM, you might have a $1,000 per month that you can bet there. And that was sort of like their way of saying, oh yeah, we're going to make gambling responsible for people, without even thinking about the fact, well, you could also just go sign up for 10 other websites and use your same identification, and none of these websites are actually required to speak or cross-reference data with one another and say, oh, Patrick already signed up for our website, so he's already used his $1,000 this month, and we shouldn't be allowed to let him bet $1,000 on our site in the same month period. So anything like that, they're just going to go through a loophole to get around it anyway.
Yeah, and what does it mean? So it means regulators should more provide education, educate the people what they are doing, right? That this is gambling, they can lose money, it can make gambling specifically can become addictive. I mean, every kind of trading for that extent can become addictive. So I think this would be better, a better effort to try to educate people and just trying to impose a new law and just do not allow it. Because again, people will work around it and it doesn't really work.
I think we're at an interesting point now where prediction markets are clearly taking a slice of the market share and liquidity away from what's going on in crypto, because crypto is boring. And then some of the things that Vincent is talking about, just the way AI is empowering people to at least feel like they're making more informed, better decisions, although the statistics indicate they're not winning anymore. Because of that, I think it's interesting because you do see people headed towards prediction markets, and I don't think we're going to see less of it anytime soon, even if clarity does come through. And I appreciate everybody's opinions on that. I want to give you an opportunity, Patrick, though, to talk a little bit about upside only, which we've had conversations about before, but I always assume there's some people that are tuning in that either haven't met you before and they don't know about what you've been doing with upside only. So if you would, a little brief intro for everybody, and then tell me about upside only. What are we going to talk about?
Yeah, sure. Yeah, Patrick Grun, originally from Germany. I guess everybody knows it from my accent already. So, but since 10 years, I live in the US. Before that, I lived for 5 years in Switzerland. So I'm a lawyer and software engineer by training. And I mean, what we just discussed today, that people are losing money, we actually turned into a product, but to their advantage. So basically creating or using this problem that most people are losing money, and we created upside only. So the idea behind this is you come to our platform, you can never lose money, but you can make money. So and how it works is we provide the people a paper trading opportunity. They do just predictions, if you will, what is happening with the Bitcoin price, with gold, whatever. So and then we have built an AI which selects trades that have a high probability of winning. If the trade probability is high enough, we do the trade with our own money as a prop trader. And if we win, we share the money with the user. So pretty simple concept. So from a user's perspective, you cannot lose anything. You can keep your money in wherever you have it, in your stock portfolio, whatever, buy and hold Bitcoin. So you do not have to sell anything just to basically put money on a margin account. That's the general idea.
One of the things that we're just kicking around is the idea that Americans have traded over $571 million specifically on Polymarket, despite this full ban and the geo restrictions, and they have a no better win rate than anyone else. And you've been building a regulated venue. What does that number, what does that money tell you about prohibition as a retail prediction strategy?
So, I mean, again, banning things makes it often more interesting for people. That is the thing. And again, it's so easy to work around, right, with the internet. It's just, I mean, if it's just one country that bans something, even if it's the United States, it doesn't work as simple as that with the internet. There are so many ways how you can work around it. It's just delusional. That's a problem in Europe, by the way. So Europeans think they make a law, or actually every single country thinks they make a law, and the entire world will obey to it. They don't. So it simply doesn't work. So we did choose the regulated route simply because there's no point in being illegal. So that is the thing, but it makes it harder. And by the way, that is the other negative side of regulations. They only impose higher barriers of entry for new competitors, right, that want to make it legal, that are not willing to do it like from offshore. So ultimately, it creates less competition, and therefore it's even worse for the users, because basically only the guys that are willing to work in the gray or even outside of the gray, gets the business, right? That's what we are seeing with all those offshore companies or DeFi. I mean, there are so many DeFi projects which they have a CEO, they have VCs. I mean, how can this be DeFi, right? I mean, if you have VCs on your company, this is not DeFi.
So the ESMA just said that event contracts can qualify as banned binary options. I know it from speaking with you for many shows now that you guys have really built with some of these restrictions and regulations in mind. Does this ruling validate your decisions and how you've built perpetuals from the start?
Yeah, I mean, absolutely. I mean, number one, it's pretty clear they are binary options. So this, what you mentioned from ESMA, this is regarding binary option bans. So basically you have things that have a binary outcome, win or lose. And this is what most prediction markets are, more or less, right? So with order book or without, doesn't really matter. At the end, it's a pretty binary outcome. So, I mean, this statement is certainly correct. And there's a binary option ban since many years, since I think 2017 or something. So, but it confirmed us with one thing, that, I mean, the regulators get active because too many clients are losing and they are complaining to the regulators, right? That's why the regulators acting. So they get the statistics, they get complaints from user that just lost a ton of money. And again, we want to end this. We want to take this really as our customer acquisition vehicle. So like more than 90% of our clients in a survey said, so I lost money with trading, with prediction markets, and so on. This is actually our customer funnel. So we are trying to basically provide a product that solves this problem instead of asking the lawmaker to put in new laws, which will not work anyway.
So Kalshi is going state to state fighting regulators in the U.S. while carrying a $22 billion valuations. So if the legal status of a venue can flip on a state-by-state basis, what should users be evaluating before they put capital or even their time or attention into a platform like that?
I mean, I think this regulatory risk is a little bit higher for the investors. So investors should really ask themselves, do I invest a 22 billion valuation? I think that is the bigger question for this. I think for clients, it's more about, what am I doing here? Is this investing? Or is it gambling? If it's gambling, I should use not more money that I would be willing to spend in Las Vegas. Because usually in Las Vegas, you have higher chances of winning, actually. Like with blackjack, you have pretty high odds. Or even with roulette, it's like almost 50-50, yeah? 47%. So, but on many other prediction markets or leverage trading, especially offshore, just with the fees, you pay so many fees with your leverage, you need a ton of profit to just break even from the fees you have spent with the platform.
Patrick, I'm sure you saw this, but this week Coinbase's AI made an embarrassing move when it published a World Cup result before the game actually even started. But your AI works a lot differently from that, where it doesn't actually predict markets at all. It looks at the trading performance, it picks the people with the best outcomes, and then backs their capital. Why is the AI picking the proven winners fundamentally more trustworthy than the AI making predictions? Why is the path that you chose better?
So, I mean, so number one, we are not using large language models. Maybe start with that. So it's not agents. So we are doing classical machine learning technologies like transformers and so on. So other techniques. So it's technically different from a large language model. It's not deep learning. So, but also I'm pretty convinced you cannot predict the market. Even an AI cannot predict the market. But what you can predict is the performance of a user in the future based on their historic performance under certain circumstances. So, and this is really the power of AI, the power to make predictions. That's also why LLMs work, right? They can predict which word comes next. That's why they sound so eloquent. So, but they cannot really do prediction of the market, because the market is not, or past performance in the market itself does not give you really a clue what will happen in the future. So, I mean, even like a support or resistance level, even if it's touched 3 times, it doesn't mean a thing. I mean, 3 times you can flip a coin and 3 times have the same side, or you can have 3 times red at the roulette table. 3 times is statistically irrelevant. But that's what basically many of those classical techniques are based on, like with support and resistance. And this is what large language models also use very often, right? Because this is what they were trained with. So like technical analysis and so on, but they are statistically not relevant. So we are just using basically classical statistics. So machine learning technologies combined with statistical systems to basically predict which trade has a high chance of winning, but not to predict what is the market doing.
That's a big difference. So retail purchasers have just repeated the oldest mistake, which is selling the bottom that whales have bought. On upside only, bad timing costs users nothing, but backing is reserved for a small group of consistently top-ranked strategies, not every winning prediction. How does that structure change retail behavior over time?
So we will see. We will look into it. I mean, we saved our clients from almost 50 million in losses to date. So if we check what basically the clients would have lost if they would have traded with their own money, it's already like 50 million in losses. So, I mean, I think one thing what I would expect to change, I do not have yet enough empirical data after 5 weeks to back it, but my assumption would be, so what we see with real trading, like what I saw at FTX and other companies, traders get worse over time because they get more stressed, right? They realize losses, they get even more freaked out, they want to make up for their losses. So what do? To make up for the losses, they increase the leverage, right? Because you need a bigger win to make up for your losses, which is exactly the wrong thing to do. And this is all caused because they are losing real money and having those emotional effects that they have on you if you lose money. So I would expect that our traders actually would get better over time compared to trading with their own money, where they get worse over time.
Makes sense. Upside only just surpassed 100,000 users, and I think you've had almost $40 billion in simulated trading volume across 180 different countries, and obviously those numbers are quite staggering. So there were skeptics that they're quick to dismiss the traction, but those are really impressive numbers. What's your answer to whether or not this type of growth and usership is sustainable?
So, I mean, we are now at 110, by the way. So it's actually, it did grow since by another 10,000 in the last 2 days or so. So no, I think it shows that we are really at the core of a problem, right? And I mean, we are facing many issues. Like even Google advertising does not allow us right now because they confuse us with prop traders. So prop traders have a similar model, but they are pretty bad, super bad actually. So, and we face a lot of restrictions with marketing right now, even so people cannot lose because simply it's something nobody has ever done before. So, and all those companies have no clue what it is and in which bucket they should put it. So, and it just looks like a trading interface. So they treat us right now like a crypto exchange or like a prediction market. So, but anyway, I think it proves our thesis that this is really a problem and people were looking for a solution. So that's why I'm super bullish now. So, I mean, this was actually better than I expected. 110,000 users in like almost 6 weeks now. This is really, really nice. And from all over the world. So we have people literally from everywhere.
10,000 is a huge change in that short period of time. In one sentence, in plain language, after this week is a broken ban, an EU crackdown, 50 legal fights, why is upside only the best model left standing for retail?
Again, because you do not gamble your own money. You can put it where it should be. Like if you buy the Bitcoin dip, then hold it. Do not buy the Bitcoin dip with 100x leverage and try to make money in the next 10 minutes, right? So that's what people should do. Invest their money wisely, invest it in stocks. That's also, again, I said this before in another show. I mean, investing means I provide money for somebody else to put it into productive use, right? That's the entire idea of the stock market. And not like, okay, I am in the market for 5 minutes, 10 minutes with super high leverage. That doesn't really provide value. It provides liquidity to some extent, yes, but it's not working capital that you provide. So provide companies, invest into a company that you believe in, that you understand, hopefully, and then keep your money there. And the way to try to get rich, which is obviously everybody would like to get rich quickly, do it on our platform. You can get rich. With just one lucky trade, you might win a few $100,000. So that's possible. I mean, it's the odds are also slim, right? We cannot increase the odds of the users, but we can remove the negative part that you have to put up your own money and you can lose your money.
Excellent, man. And the website, upsideonly.com. It's all one word, upside only, spelled just like you think it would. If users now were going to that website, where would you want them to go, or is there anything specific they should look for?
We have a simple explainer video right on the start page. So, and I mean, really, you do not have to invest money. That's maybe the most important thing to keep in mind, because our biggest challenge is it sounds too good to be true. So basically, people think it must be a scam, right? If somebody promises you can make money but not lose, it sounds like a scam. So this is our biggest challenge to keep in mind. You really do not deposit money, not even like in any way or form. You do not have to connect your wallet, nothing. So you can just start trading with monopoly money, with paper trades, and we will analyze your trades. So, but the video is maybe a good thing as a starter to better understand how this model works.
Excellent, man. I know we've had the opportunity to have the conversation quite a few times on here. It's been awesome to watch the growth that you've had, the users and the acquisition of those things, because I know you've been working hard. And it's always great having you on the show. But today with a panel of 10, the thing is I love having 10 people on here, but it feels like I only get a small sample of what everybody has to bring to the table. So this is your last chance, if you guys are watching this video right now, to follow all the people that are in here right now. Top row, Julie, Kinnis, and Shyla. I appreciate you two being up here and filling in the top row with the three of us, no face profiles up here, me and Buzz and Mario hanging out with us. And then those boys down there on the bottom, Vincent, I appreciate the Chat GPT outlook. I cannot wait to hear what you've been doing when you get it next. And I'm going to need the tips because, like I said, I know I'm not getting the most out of it. I appreciate you, Garfield, for bringing in some of the sentiment, especially on the last show, too, talking about RWAs with this man. Anytime I can get you in here, I will. I'm going to go look for Zach XBT's post. I need to catch up on what's going on with that exchange. And thank you for making the time. I don't feel like we get you on here often enough, so thanks for swinging by today. And Chris, I am just as mad as you, dude, like a hornet, about the fact that Clarity has turned into such a mess. But I'm going to be with you watching it up until next week. I hope we get a chance to connect between now and then. Follow all of these people on X. They all have their names in some version on the profile that you're looking at right now. And you can go connect with them in spaces and follow their posts and stuff like that. But as for me and Buzz, the best place to connect with us is on our X profiles or here on another Roundtable show or a Mario Nafal video. We'll look forward to seeing you here next time, and we will see you then. Have a good day.